This is a quick video on what to do if you have rental property. What to do means what documents do you need if you want to lodge your tax return and you have rental property, because people are confused what things they can claim, what things they cannot claim. There is a checklist if you email us and we will email you back. But I will just give you quick guidelines on what you can claim and what is the most important thing to claim which people do not claim. So people, like, there is one deduction which people do not claim, which taxpayers do not claim, and which is the most beneficial deduction. So we will go slowly in this video. Let's start. So what to claim means there are a lot of expenses, but what documents do you need? So let's start with that. Basically, you need financial year-end document. Real estate gives you every monthly statement. If you have most of the properties, they are managed by real estate. So at the end of the year, they will give you year-end report. Year-end report will show how much is the gross rent they collected, what expenses they incurred. Let's say they incurred repairs, council, water, or some strata charges, or cleaning, or lawn mowing, how much water usage charges they have collected from tenant. So they will give you year-end financial statement. Normally real estate agent charge money for that. Even if they charge or they do not charge, that's not important. You must get a report because that is the authentic report. That is a report which accountant will ask you. In case you're audited by tax office, that is the report which they want to see. They don't want your records. If you have a real estate agent, then they would like to have that report. If you do not have a real estate agent and you're managing the property yourself, then obviously your bank statement will do for the gross rent collected. But 90% of cases, property is managed by real estate agent. So you must get a financial year-end report showing the income and all the expenses, right? Now, what is the next expense? Council rate. Council rate can be paid by agent or can be paid by you. If it is paid by agent, it will come up on the statement. Normally, it is paid twice a year or 4 times a year. So you will see on your report, on the financial report, or if you have paid it, then you should have the copy. You need to record it. Next is water rate. Same thing, 3 monthly or twice a year. Okay, repair bills. If repairs have been incurred by agent, then agent will put it on his financial statement. If you have paid it, then you need to have your own repair bills. Similarly, pest and cleaning, if he has done it, then it should be on the report. Otherwise, you need to have your own invoices. Gardening, lawn maintenance, same thing. Land tax. Now, land tax is not paid by agent. Land tax bill comes to you. Land tax is when your investment property land value is more than the threshold. Currently, threshold in New South Wales is around 900,000. So if your land value is more than that, you will pay 1.6%. Every state has got a different slab and has got a different value and got a different rate. So wherever is your investment property, search in Google land tax Queensland, land tax New South Wales, land tax South Australia. Understand the rule, and you should know how much land tax bill is coming to you. In Sydney or Melbourne, land tax bills are very high because it's 1.6% and land value easily touches 600 or 700,000. So if you have 3 or 4 rental properties in Sydney, bad luck, because you have to pay a very big land tax, right? Bank interest. Bank interest is not paid by agent, it is paid by you. So you should have an interest statement. Bank will give you interest statement, how much interest you paid in last financial year for that loan. Make sure you have that when you are lodging your tax return. Next is property management fees. It comes on real estate statement. Do not worry about it. Same thing, strata and body corporate. If agent is paying that strata, then it will come up on the statement. If you are paying from your pocket, then you should have the proper tax invoices for that, for the strata. Now, what is the last thing which is very important, which has been missed? Let's see in the next slide. The most important expense is depreciation. Why is it most important? There is a reason for that. It is very important. It is most important. Why? Because you don't pay it from your pocket. All other expenses, whether land tax, whether bank interest or repairs, you are paying from your pocket and then you are claiming it back. But depreciation is the only expense which you are not paying from your pocket and you are claiming it back. So for example, your depreciation is 15,000. For a new properties it can be 30,000 also. If depreciation is 15,000 and you come in 40% tax bracket, so 15,000 multiplied by 40%, how much is that? So you are getting 6,000 refund just because you have depreciation. You have not incurred 15,000 expense, but still tax office will give you 6,000 just because you have depreciation. So this is called power of depreciation. There are few books in Amazon. Power of depreciation. It can boost your refund. It can boost your cash flow. You need to understand it. Right? That is the way how you create a stable investment portfolio. Okay, and let's move to the next slide. I will come to this point later also. Okay, so what is the final conclusion? This is a very short video, obviously, but this video was created just to tell you what things you need when you are coming to lodge a tax. Most of the clients which come to us, first timers, they do not have any idea about depreciation, and that is why we always tell them go back, go to quantity surveyor and get depreciation report. Now when to get the depreciation report? It's a very important question. If your property is built after 1985, then you can get depreciation on building. Building means the structure or the things which are connected to the building, that is called structure. But if your property is before 1985, then you will only get on plant. After 1985 you get both on plant and depreciation. Before 1985, if it was constructed, then you can get depreciation only on plant. What is plant? Plant is which can be removed from your building, which can be curtains, which can be fans, which can be doors. So these things are plant. Okay, but anyway, it does not matter it's a plant or a building. You must get depreciation report when when you want to hold that property for a long time. If you want to sell it eventually after a year or two, I don't think it's worth it, but it's your choice. You will get more refund. Obviously it is not worth it. It is only worth it if you want to hold on for a long term, for a long value, for a long term. Only then it is worth to get a depreciation report. Now who will do the depreciation report? As you can see on the screen, quantity surveyor. Quantity surveyor, they are professionals which are recognized by tax office. Your accountant will not do quantity surveyor report. Depreciation report is not done by accountant. This is a myth that accountant will create depreciation report. No, ATU accepts only report of quantity surveyor. Make sure you find a quantity surveyor. Search in Google, search in Yellow Pages, your local quantity surveyor, take a quote, just call them and ask them, I've got property, it's a unit, it's a house. How old is the property? 10 years old, 20 years old, 50 years old. They will give you rough value. They will give you rough benefit you're going to get from the depreciation, and then you decide. 80% of the time it is always worth it to get the depreciation report. Only if the property is very old, it is one bedroom, it has got nothing inside it, or like no fittings or nothing like that, only then it is not worth it. But 80 to 90% of time it is always worth to get a depreciation report that is going to boost your refund. The more new property, the more depreciation you get, because the cost of building the property is high. Higher the value of property, higher the value of construction, the more depreciation you will get, right? Thanks for watching the video. I have given you very short tips. They are very short tips. They are very brief. This is not a detailed video. This is just to advise you that you must have a quantity surveyor report and those things which I've explained in video whenever you want to lodge your tax return with a rental property. If you follow those steps, those things which I've told you, even if you get audited by ATO, you don't have to worry. Whatever is the refund, that's not important. As long as you have all the documents, you should not worry. If you like this video, or if you know any friend who has a rental property, please share this video and subscribe to our channel. Thanks again for watching. See you in the next video. Bye for now.